Hey everyone, welcome back to Corporate Decoder, the place where we decode the maze of corporate finance. And if you thought gold prices were volatile, just wait till you see these numbers. In this video, we're diving deep into Gold.com Incorporated's latest quarterly report, a 10. Q filing that spills the beans on their financial health and what lies ahead. Before we jump in, if you are all about cutting through the corporate jargon to get to the real story, make sure you subscribe. And hey, we've got a growing community on Discord to discuss these findings further, so check that link in the description. Alright, let's get straight into it. Gold.com Inc., a name that probably rings a bell in the precious metals world, has released its quarterly report for the period ending the 31st of December 2025. Remember, they recently changed their name from a Mark Precious Metals Inc. and even hopped over to the New York Stock Exchange under the ticker Gold. A big move signaling perhaps a new era, or just smart branding. First up, the balance sheet, the snapshot of what a company owns and owes. As of the 31st of December 2025, Gold.com, quote, S total assets stand at a hefty $3.8 billion. That is a significant jump from about $2.2 billion just 6 months prior in June 2025. What is driving this surge? Well, their inventories alone doubled to over $1.5 billion. It seems they've been stocking up on gold and silver, perhaps anticipating market moves, or just to meet growing demand. Their derivative assets also skyrocketed from $134 million to nearly $1 billion, indicating a heavy reliance on hedging strategies, which we'll touch on later. On the other side of the ledger, liabilities are also climbing, totaling over $3.1 billion by the end of 2025. A big chunk of this increase comes from deferred revenue and other advances, which more than tripled to $1.7 billion. This suggests a lot of customer money is coming in for future deliveries, which is good. But it also means they have a massive obligation to fulfill. Now let's talk about the income statement where the story of profits and losses unfolds. For the 3 months ending the 31st of December 2025, Gold.com reported revenues of a staggering $6.4 billion. That is more than double the $2.7 billion from the same period in 2024. This massive revenue jump is largely driven by a huge increase in forward sales, which can be a bit of a double-edged sword boosting top-line numbers, but having a minimal impact on actual profit. Their gross profit, the money left after accounting for the direct costs of sales, more than doubled to $93 million. However, their gross margin percentage actually dipped slightly to 1.44% from 1.63%. This tells us that while they sold a lot more, their profit margin on each sale slightly decreased. This is a classic sign of a high volume, low margin business, where even small shifts can make a difference. And what about the bottom line net income attributable to the company for the 3 months ended the 31st of December? 2025 came in at $11.6 million, up from about $6.6 million in the same period last year. While a nice increase, it is important to remember this is a tiny fraction of their overall revenue, highlighting that slim margin we just mentioned. The cash flow statement is crucial for understanding how money is actually moving in and out of the business. For the 6 months ending the 31st of December 2025, operating activities provided a healthy $152.8 million in cash. This is a huge turnaround from a negative cash flow of $17.5 million in the prior year. The big driver here seems to be a massive increase in deferred revenue and other advances, essentially customers paying ahead of time. However, investing activities used up a significant $39.6 million, mainly due to increased secured loans made and purchased. Financing activities also saw increased outflows reflecting debt repayments and dividends. Let's break down what is in their inventory pile. As of the 31st of December 2025, it is valued at a colossal $1.5 billion. This includes a staggering $504 million in product financing arrangements and $85 million in borrowed precious metals. This tells us they are heavily leveraging financing and borrowing to manage their inventory, which can amplify gains but also magnify risks. Their derivative assets, which are essentially financial contracts used to manage risk, ballooned to nearly $1 billion. This highlights their aggressive approach to hedging, but also points to a complex financial structure. Now, for some of the more interesting bits, contingent considerations. Following their acquisitions of LPM, Pinehurst, and AMS, they have liabilities tied to future performance targets for LPM. They might owe up to $37.5 million. For Pinehurst, it is around $5.3 million, and for AMS, it could be up to $12 million. These are significant amounts that could impact future earnings if targets are met. The valuations here rely heavily on forecasts and assumptions, which can be tricky. When we look at who is buying from Gold.com, we see a strong reliance on a few major players. For the 3 months ending the 31st of December 2025, HSBC Bank and Deutsche Bank together racked up nearly 40% of their revenues. That is a massive concentration if even one of these giants decides to shift their business. It could significantly impact Gold.com, S financials. Switching gears to their biggest segment, wholesale sales. Revenues here jumped over 124% to $4.89 billion for the 3 months ending the 31st of December 2025. But again, remember that heavy reliance on forward sales, which inflate revenue but not necessarily profit. Gold ounces sold actually decreased by almost 20%, while silver ounces dropped by over 30%. This suggests that the revenue growth is primarily from price increases and those forward contracts, not necessarily from selling more physical product. Their wholesale ticket volume, though, an indicator of order activity, did see a healthy 32.5% increase, suggesting more transactions are happening. In their direct-to-consumer segment, revenues more than doubled to $1.59 billion. What is really interesting here is their average order value, which jumped 51.8% to nearly $5,000. This means customers are buying more expensive items or more items per order. Their gross profit margin in this segment also improved slightly, which is a positive sign. The number of new customers and active customers also saw solid growth, indicating successful customer acquisition and retention efforts. Finally, the secured lending segment, while much smaller, is showing steady performance. Interest income is up slightly, though the number of secured loans outstanding has decreased by over 30%. This suggests that while they are making fewer loans, the average size of those loans might be increasing, or they are getting better interest rates. Looking at their liquidity, Gold.com seems well positioned. They have substantial assets and access to a significant credit facility over $422 million. Their product financing arrangements are also substantial, providing additional cash flow. They recently paid out 2 significant dividends totaling almost $10 million. A sign of confidence, or perhaps a way to return value to shareholders. When we look at commitments, the numbers are significant. Their futures and forward contracts alone represent billions of dollars in potential obligations and receivables. While they state they are substantially hedged and believe counterparty risk is mitigated, these massive figures underscore the complexity and inherent risks in their business. The company is keeping an eye on new accounting rules, particularly around income tax disclosures and disaggregation of income statement expenses. These are mostly administrative changes for future reporting, unlikely to cause immediate turmoil, but important for transparency in the long run. It is also worth noting their share repurchase program. They have authorization to buy back nearly 679,000 shares. While they didn't repurchase any in the last quarter, this program provides flexibility. And for those who need the deep technical details, the company has also provided the usual stack of certifications and exhibits, including inline XBRL documents for data transparency. Now, for my take, Gold.com is definitely in a growth phase, fueled by acquisitions and strong market demand for precious metals. Their revenue numbers look impressive, but it is crucial to look past the top line. The slight dip in gross margin percentage, the heavy reliance on forward sales, and the massive derivative positions indicate a business that thrives on volume and complex financial instruments. The reliance on a few large banking clients for revenue is a definite risk, as is the sheer scale of their derivative exposure. However, their strong cash flow from operations and access to credit provide a good safety net. The acquisitions of SGI Pinehurst and AMS are significant moves that could pay off big if integrated successfully, expanding their reach into numismatics and other valuable markets. The company's direction seems to be towards diversification beyond just basic bullion trading, leveraging their e-commerce prowess and expanding into related services. The story here is one of calculated risk, taking an aggressive expansion in a historically volatile market. So, what is my conclusion? Gold.com is navigating a complex market with a multifaceted strategy. The growth is undeniable, but the execution of their hedging, acquisition, and financing strategies will be key to sustain profitability. It's a company to watch closely, especially given the ongoing economic uncertainties. What are your thoughts on Gold.com, financial performance and their strategic direction? Let me know in the comments below. If you found this breakdown valuable, give this video a thumbs up, it really helps the channel, and of course subscribe for more behind the scenes looks at corporate filings. Don't forget to join our Discord community linked in the description. Thanks for watching, Corporate Decode viewers, and I'll see you in the next one.